The work of one of the largest financial institutions in the country, Silicon Bank, which specialized in working with Silicon Valley startups, was terminated the other day. The bank announced that it has made an unsuccessful operation with prices and would additionally issue shares of more than $2 billion to compensate for losses. Depositors rushed to withdraw their funds, and as a result, the capital outflow accelerated so much that the regulator was forced to declare the bank bankrupt. Now it has been transferred under the management of the Federal Deposit Insurance Commission. The remaining capital is used to compensate the depositor and repay the debt. According to the CNN, this was the largest bankruptcy of the U.S. bank since the 2008 financial crisis, and the Oyster Journal expressed concerns about the possibility of a chain reaction of a financial system. The U.S. banking crisis rating agencies urgently changed forecasts for America from stable to negative. Moody's agency names 6 more financial institutions that are facing imminent bankruptcy in California. The insolvency of the leading bank that financed startups suddenly burst, and it caused the most serious IT giants to lay off thousands of people. Facebook 12,000 people, Google 10,000 people, Microsoft and Amazon 18,000 people. It's so much, and the expert says that it's doomsday approaching for the Silicon Valley, and in general, economists have long predicted that this bubble will burst, although no one expected that problem will begin soon. The main topic discussed in recent days, of course, the bankruptcy of Silicon Valley Bank. This is the 16th largest bank in US in terms of assets. Someone calls the story local. Someone says that we're waiting for the repeat of 2008 and the global financial system is on the line. Even Joe Biden refused to comment on the situation and preferred just to leave.
Thank you. God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
All right, thank you, everybody.
Hi everybody, it's Alex Gray, and today we'll talk about USA bankruptcy, crisis, people just taking all the money from the banks. So let's begin. What is going on in general? How dangerous it is? In general, the chain of the events is quite long. Everything started with inflation, the FDE began to raise the rate, the FTX exchange went bankrupt, but very interesting is more recent events that start with the bank of Silvergate. Let's try to figure out what is happening now in the American banking system and how dangerous it is and what it can lead to. So Silvergate Bank, he worked with the crypto companies and crypto in general, and therefore the fall of the digital market, a number of bankruptcies in 2022 hit the bank hard, and the loud closure of FTX last year, the customers began to withdraw money from Silvergate. Someone needed money to cover expenses, someone just worried about the state of the bank. In September, Silvergate had $12 billion, and there were less than $4 billion of deposits left in December, and the most of this money was invested, including the US government bonds. But since the purchase, the situation has changed. Bonds fell in price due to the FED rate hike. The old bonds gave 2%. FED raises the rate, and now the new bonds give 4%. Well, why keep the old ones at 2% when there are new ones at 4%? And the old one is falling in price. So they purchased the new ones for the 4%. In order to return money to Silvergate customers, they had to do something, and they just sell all the investments at low price, and the result, in March, Silvergate's situation did not improve. They had to sell more and more bonds, and there was the threat that the bank would not have enough money to provide all money to the customers. So customers panicked and ran even faster from the bank. Well, the so-called bank run led to the bankruptcy because there was not enough money for everyone. That's the story. The technological crypto companies were already on the edge, but then another bank gave us a reason to panic, and this is the Silicon Valley Bank, which has been working with startups in Silicon Valley for about 30 years, and it suddenly revealed that it wanted to recapitalize more than $2 billion. And that's why so many problems arose. From the same American government bonds that was falling in price. That's why they're losing money and try to recapitalize and invest in new bonds. The collapse of the banks, cryptocurrency startups causes depositors to panic and forces banks to look for the quick cash somewhere. Just imagine one client put the $1,000 to the bank deposit. When he wanted to withdraw it, the bank could not give it back because the worth of this money was not the $1,000, now it's $950 because of the falling of the bonds. And that's where we get these risks about not enough money for the customers. Well, in general, it's not a big tragedy to issue new shares. It's a normal practice, and under healthy market conditions, the bank simply bought new bonds with investors' money, would have waited for repayment of the old ones, and would have returned to normal. It would have been necessary to wait the repayments of the old ones just not to fix the very loss. But the negative background in the Silvergate, bankruptcy markets, and the Peter Thiel also predetermined the fate of the bank. The negative background was the general decline of the investment market. Silverbank main clients were IT startups that used to attract money easily, but with current rates, it was almost impossible to do this. But USA government will save the banks. The FED is already getting involved and plans to make it easier for banks to capitalize on which access to discount window has fallen significantly. We have already said that one of the problems for banks is that it's not profitable to urgently sell bonds, but this program, the FED will buy assets and its own expense. In fact, and it covers the bank's losses directly, like in 2009. They need to assess the problem of the banks and try not to strangle the economy even more. We must understand that American Central Bank is in a difficult situation now and banks need to be rescued, otherwise the financial situation will suffer, so they will have to soften the policy and sacrifice by inflation. That's why ordinary people will say that government don't care about them, only care about bankers. Although, on the other hand, if people also clearly would not like to stay without their deposits in the collapse of the banking sector. Biden said that US taxpayers will not suffer any losses. The money will be taken from the insurance fund and the irresponsible managers is no longer welcome. But that Biden speech took only 5 minutes and he did not answer questions. So they have already showed at the beginning of the video, it seems that American government really sees very serious system risks in the current situation in the banking sector. But we will not see the same crisis that was in 2008. The reasons for that crisis was completely different. Everything will be fine, everyone will survive, and we will go to the normal state in some time. So hit the like, subscribe for more, comment down below what you think about it, share it with your friends. This was Alex Gray, and goodbye.